Thursday, October 23rd, 2025, Maneco 64, home of alternative economics and contrarian views. Well, back during the beginning of World War II, the U.S. put a lot of pressure on the Empire of Japan. It blockaded Japan. Japan was cut off from its oil, and it seems like the same thing is happening today, but not with Japan, of course, with China and India. And how is that being done? Well, President Trump just declared sanctions on Russian oil giants Rosneft and Lukoil, and China and India as well. They've been buying a lot of oil from these companies, and now they're concerned. There's concerns that, of course, especially in China, if they keep buying this Russian oil, Chinese companies are going to be sanctioned. And I don't think the Chinese are going to stand for this. Not that I'm pro-Chinese, it's just the way it is. So we're going to look at that today. And I think this is all related to the dollar. It's all related to BRICS and gold and silver. I was going to talk just about gold and silver today and the ratio and India. But I think this is really significant because, yes, this is virtually, well, this is economic war. And usually economic war graduates to real kinetic war. And that is worrying. So, yeah, the news came out yesterday. I see here on the FT, U.S. imposes sanctions on Russia's Rosneft and Lukoil. And this morning, there's an article here on Bloomberg. It says, U.S. sanctions on Russian oil giants send shockwaves across China. U.S. sanctions on Russia's energy giants are sending shockwaves deep into the heart of China's oil industry, where both state and private refiners face heightened pressure to keep up supplies while steering clear of penalties. As much as 20% of China's crude imports, about 2 million barrels a day in the first 9 months of this year, came from Russia, making it one of the country's leading sources of oil for processing into products such as diesel, gasoline, and plastics. The Trump administration's blacklisting of Rosneft PJSC and Lukoil PJSC is the latest in a series of measures rolled out by the US, the European Union, and the UK targeting buyers of Russian crude and the contribution they make to Moscow's coffers and its war efforts in Ukraine. Transactions involving the two firms need to be wound down by November 21st, according to the U.S. government. So that's the situation. This is concerning because this isn't an attack, I guess, on BRICS and what they're doing really to get away from the dollar. Even Trump has admitted that BRICS wants to not destroy, but is declared war on the dollar. And I don't think that's the BRICS sentiment. They just want to have an alternative. They don't want to be dependent on the dollar for everything. They can still deal and trade in dollars, but they want to have their how can I say, alternative. It's just like you. If your bank isn't treating you properly, you might want to open an account with another bank. And I think that's what's going on. But the way they're doing it, though, the BRICS, through purchases of gold and also silver, which we're going to look at in a minute in relationship to India. What they're doing is a challenge to not just the dollar, but the fiat currency regime that has ruled the world since 1971, and especially, let's say, in the last 30 years or so, the central bankers, they've had a lot of power especially the Federal Reserve. And I've said recently that gold is going to replace the Federal Reserve in terms of power. And this is all intertwined because China is setting up this massive mechanism with vaults for safeguarding gold all over Asia, all over China, so that so that countries can deal with China and use gold as settlement. They're creating a vault in Saudi Arabia, I think Singapore, Hong Kong, and it's going to spread, of course. And I think this is all part of this, and we'll have to see how the Chinese react. I don't think the Chinese are the kind of, well, it's not the kind of country and regime that will bend its back to any country. And that's what is worrying. And maybe that's what gold and silver have been forecasting the last month or so, or maybe 6 weeks, that there is conflict coming in the world. And when there is conflict, kinetic, not because trade wars usually, and embargoes and sanctions usually evolve into real wars. Maybe that's what gold and silver are telling us. So yeah, we need to keep an eye on China's response to this. And yeah, now let's look at gold and silver, because there's been a lot of people saying the bubble in gold and silver has burst, and I think that's premature. I think we've still got a few years left in this massive bull market in gold and silver. And actually a bull market in gold and silver could even be the wrong term. It's a bear market in this fiat currency regime, this dollar regime that has ruled the world. And mathematically, I think it's a certainty. And we know historically that all fiat currencies, they go to zero. And I'm just looking here at the U.S. debt clock, and we've just jumped above $38 trillion, the national debt. Yeah. So I also saw that Secretary of the Treasury, Scott Bessent, said that the deficit has decreased, that they're reining in the deficit. But I saw that Luke Groman responded to that. And he said the U.S. deficit was down in fiscal 2025 versus 2024 due to creative accounting. For example, $107 billion negative outlay in September helped drive the record $198 billion surplus in September. And he asked the question, what is a negative outlay? Well, can I pay my taxes with a negative bank deposit instead of cash? So, yeah, creative accounting, that's what's going on. Yeah, gold and silver ratio. I was speaking to the Gnome of Zurich, I think it was yesterday, and we were talking about gold and silver. And he said to me, we're not near a top, because with the gold and silver ratio at 83.7, where we are now exactly, and it's 8 a.m. London time. Yeah, he said with the gold silver ratio where it is, it's not a sign of a top in precious metals. Usually when there's a sign of a top, the gold silver ratio drops quite a lot, i.e. that means silver outperforms gold. Back in 2011, that ratio got down to just below 31. Back in 1980, that ratio got to around 16 to 1. So even if we're going to say that this ratio now is going to get to, let's say, 60 to 1, because it's kind of double what it was in 2011. And the reason why I say double is because it doubled from 1980, right? And I'm not even being too optimistic about silver. So that would mean the gold silver ratio around 60, and we're nowhere near there. And then I saw as well that Tavi Costa, who I've had on the channel quite a few times, not recently though, maybe I should get him on again. He posted this: major reversal in gold today, and I think that was yesterday, holding strong above the $4,000 per ounce mark. Gold bull cycles don't typically peak with gold to silver ratio as high as 85. So there you go, and I'm gonna put this up here for you, his history of gold cycles on the screen, and you can pause it and have a look. It's very interesting. And now I want to talk about India, because there's been a lot of talk, I think, in the last 24 hours that basically the RBI, which is the Reserve Bank of India, it's their central bank, they've issued directions on lending against gold and silver collateral. And I have an article here from July 29th, 2025. I know it's an old article, but I don't think people had seen this. And someone posted on X, like I said yesterday, about this. Someone called Nestor Sanchez. And I read here, India too is remonetizing silver. April 2026, silver, previously only gold, can be used as collateral for loans. And basically they've set a ratio between gold and silver of 10-1, which would mean, it means that silver is much more valued in India. It would mean right now that silver should be around $400. Am I saying we're going to see the gold-silver ratio drop to 10? No, but I think at where we are, we're nowhere near where it should be. Historically, it's been around 15, 16-1 in the last few hundred years. I think during the Roman Empire, it was 12-1. And some people argue that it should be 7-1, because that's how much, that's the gold to silver ratio in the ground, right, for mining. And there are some of those who thinks it's going 1-1. I'm not too sure about that, but who knows. So now let's have a look at the markets. It's 10 past 8 a.m. We've got spot gold trading at 41.15. That's up about 18 bucks. High's been 41.38 and the low's been 40.64. Silver is back above 49. We're at 49.20, up 78 cents or 1.6%. It is outperforming gold, but that gold silver ratio is still around 83. So silver has a long way to go. I suspect we could see a test of 50 again today or tomorrow, before the end of the week. And I notice here that the spread in the spot price is still quite wide. We're hearing that there's some physical silver flowing into the LBMA, but I'm not sure what's going to happen there. I think supplies are still really tight, and mainly, of course, because in the LBMA, they've been dealing in paper for many decades, and now people want physical, and that's a problem for them, because they produce all these fictitious tons or millions of ounces of silver, and now people want the real thing and they can't get it. So what about the stock market? Yesterday, stock market was fairly weak. It rebounded a bit at the end of the day. I saw the NASDAQ finished, NASDAQ 100 finish about just below, just under 1% lower. And I saw that there's some news in the subprime auto loan sector. Another lender has declared bankruptcy, filed for bankruptcy protection. That's Prima Land Capital Partners. Why is this significant? Well, because we've seen in the last few months that Tricolor, also one of these auto lenders, went under. We've seen that First Brands, who were involved in auto parts, they've gone under. So the cracks are starting to show in the private credit market, and I've been warning about this, the shadow banking. So we'll need to keep an eye on this. This is quite serious, I think. So another one bites the dust there. Well, the stock market this morning is virtually unchanged. The S&P is up a little bit, 0.25%, and the NASDAQ as well, about 1/3. The Dow futures is unchanged. And so are the currencies. Crude oil has benefited today, of course, on the news of the sanctions on these Russian companies. It means that, there won't be as much supply out there because Russia won't be selling as much oil. That's the expectation. So WTI crude is up 3.5% at 60.50, and Brent crude is up 3% at 64.20. So with that, I'm going to wish you all a very good day. Take care. Bye.